Hi, everyone. Welcome to this week's installment of Mish's Market Minute on StockCharts TV. I am your host, Mish Schneider. And as I say every week, I have tons of stuff for you. So what I'm going to recommend is I'm going to bang through this. I've got different categories, which I'm going to tell you what they are, and 25 charts to look at. We're going to get that done in this time. But I'm not going to do a lot of fluff in between. So get your paper out. Get your pencil out and take notes, because this is all going to be actionable information, a lot of which I featured recently with Charles Payne on Making Money with Charles Payne on Fox. So let's get going. We're going to start really basically with a heavy focus today on new tech stock picks. This is what Charles was interested in. This is what we're interested in. And I still maintain that even if the market corrects, these are the stocks to buy on the correction. And if the market doesn't correct, that these stocks have a lot more upside compared to some of the old dinosaur tech stocks. We are, by the way, in earnings season. So I always caution you, no matter what I talk about, is for you to check out your earnings date and ask yourself if you want to have a position into the earnings date or wait till after earnings. That is definitely your call. Me, particularly if I don't already have a position and a huge cushion, I like to wait till after earnings. So what I'm going to do is, first of all, follow up on momentum. I talked about it a little bit last week, that there was a negative divergence happening and a positive divergence happening. And those three instruments are really key to the picture right now. And also, I wanted to tell you that I broke up these new tech stocks into these larger categories. So we're going to cover a couple of picks in manufacturing and industrial sector, in the big data sector, in the ag tech sector, which I covered last week, but I'm going to repeat a couple of those. The retail sector, the artificial intelligence sector, space as in up in space, health, EVs, electric vehicles, cybersecurity, and finally in the crypto space. And since it's always good to have something to refer to, this is all of the symbols that I am ambitiously planning to cover with you today. I will not read them. You will see them as I go along. Okay, so let's go to the stock charts here and start with that momentum. I like to look at transportation. I have found this to be an extremely reliable indicator through the years of letting me know when there's a divergence and a bottom is in form, and letting me know when there's a divergence and a potential top. Now, of course, people say this is a stock picker's marker, and that is true, but you should understand that there's stock picking that to a point works out really well and may go counter to the market. But if the market gets any kind of serious correction, everything pretty much except for the safety plays will go down. So just know that in your head. Now this is IYT, and I'm showing it to you because last week I showed you that it went into a negative divergence, and here it is still in a negative divergence, and yet we're having an inside day. It's still trading right above the 10-day moving average, but I don't have on this chart, and we have not gotten a price confirmation. But we have two things to be cautious about. One, of course, is the negative divergence in that this is under the 50 while this is over the 50. And the other is in terms of the leadership, which right now you can see is starting to underperform the SPY. Why transportation? It is one of the best indicators in terms of the demand side of the economy. I don't really necessarily think that the supply side is as important to look at corrections, unless, of course, there is no supply, in which case then you're talking inflation. But in this case, we really want to make sure that demand stays robust as we're going into more work with the pandemic, as we're seeing a change of administration, as consumers have actually been somewhat on the sidelines with retail sales down, as people are looking at what he's going to do with tax codes, energy, et cetera, et cetera, et cetera. So look here. And right now, what I'm saying is, piling up on new longs, unless you're really sure that the stock is going to go counter, you have a good stop, you have a good target, and a time frame, I would at least keep somewhat on pause to see whether or not this comes back through the 50, or if this starts to break down under the 50, I would take that warning very seriously. The other one is junk bonds. I've talked to you about this over and over and over again. This is a great risk on indicator. This is the appetite for risk on junk companies that give high yield. Now, it turns out that the yields on this in general are the lowest historically they've ever been. And with this trading above all this consolidation that I talked about with you last week over 109, This hasn't done very much in terms of the momentum. It's still negative, and you can see that it's underperforming even more so the benchmark. So this is up here. I'm not scared yet, but I would certainly be keeping an eye on this as well, because if it starts to break down as the 50-day moving average is moving up, especially let's call it 108 and then under the 50, another big warning. Now on the flip side of all of that is volatility. And if you look here on the volatility, even though the price is really down, look at the momentum positive divergence here, and that the momentum is over the 50. Now, of course, this is underperforming the SPY, so you're not getting what you saw in the others, a match between the momentum and the leadership. No leadership here, but that's not something I would really worry about too much. What I would worry about more is why this is hugging the 50 while this is below the 50. And so I would look for some kind of sign. Now, right now you have a lot of support down here around that 16 level. I would say first sign would be a break back over 17. Second sign would be a break over the 50-day moving average, and particularly what happens with the Momo at that point, especially if that Momo, you see this Bollinger Band here, if that Momo takes out the Bollinger Band. So those are 3 reasons to have a keen eye on what things are doing right now. So now let's put all of that on the shelf, and let's take a look at some of this new tech stock, starting with the manufacturer industrial side of things, and we're going to look at Snowflake. Somebody pointed out to me that Warren Buffett owns this stock. Does that impress me? No. I never make decisions based on what anybody is doing. And actually these days, God bless him, the guy has been a genius throughout his life. He is kind of out of sync with the times and has been well underperforming the market over the last decade. And this is one of the reasons. Kudos to him for buying a new tech stock, but nonetheless, we want to do this because it makes sense. Now, there is no momentum indicator yet because you can see this thing is a new issue, number one. It is still underperforming the SPY, number 2, but I like this company overall. And what I'm waiting for personally is right now, even though the 50-day moving average is still above it, I won't necessarily feel like I need to wait for that. I'm waiting for this to take out 291. And if it takes out 291, then I feel this high, by the way, here is 295. So it would really be over the high of the last couple of days. Then 291 would at least give me an opportunity to take a look at this, to get long with some kind of a starter position. And this has an $18.72 ATR. So we're talking about a $2 times ATR would be $36 risk. I would probably want to risk somewhere under 266. That would be less than $36. That would be about $30, a little more. Well, actually a little less. What am I saying? About $25. And that would actually be like 1.5 ATR risk. I like that, to see if it gets going. And of course, if it can't get over that 50, at 302.66, then we know we're wrong and we would get out. And you could always raise a stop on that. This would be pure position sizing to use that level of risk. Next one in that area is Now, which is actually called ServiceNow. And ServiceNow, again, this is all in the manufacturing industrial space. Now, I like this too. However, look at our momentum indicators, still negative, although coming back while this cleared the 50-day moving average and went up even more today. The day to really have bought this would have been actually on the day where it took out the 50, but we didn't do that. So what I'm looking at now is if we start to see the momentum catch up, great. If we start to see the momentum sort of stall here above this Bollinger Band, and we can get any kind of correction back down somewhere around, I would say 535, that's $10 lower. With the low of the day, I'm talking to you at 537.87. So let's call it somewhere between 535 and 540. Then I think you have a really clean risk to underneath the low of this day, and that would be under 527. I like that. Then if this thing is going to continue to go up, you'd want to see it take out 550, etc. And again, as I mentioned to you before, always check your earnings dates. Now, if we move over to big data, this is something I've talked with you guys before. Datadog, we're in Datadog, and right now Datadog is getting an inside day. Got an upgrade, but that means nothing to me as well. And also we've got here a situation where it's still in a negative divergence on the momentum compared to the chart. Now we're already long at around 96, so we have a cushion. And at this point, if I really wanted to see what this could be made of, first of all, we want to see this at least start to go on par leadership with the benchmark. And we want to see this take out the 50-day moving average in the momentum, or at least stop ticking down and start ticking up. And then I would say, really, I would want to see a breakout over this 106.20 level. And then you could actually use a risk underneath the low of this day or underneath the day low that it pierced the 50-day moving average. And with Datadog, you have an ATR of $4.56. So if you're going to buy it over 106 and you're going to risk down to 97, that actually puts you right in line with about 2 times the ATR of risk. All right, next one in that space is a stock that got a lot of attention because of Cathie Wood buying this one. It hasn't done very much yet. I haven't checked the earnings on that. Again, new issue, no momentum data. But what we could see is that it's still underperforming the SPY. But more importantly, it is over the 50-day moving average. And it could be trying to build some steam here. So I would say 24 is your max risk. And if it continues to hold here above this 25, and let's say gets through today's high, which is 26.68, then maybe that would be a good, very low risk opportunity to get in and put your stop in under 24. This is still probably a stock that's going to continue to grow. Moving on to the ag tech space, I've chose one stock that I covered with you last week. In fact, I told you this was my favorite stock in the space, Seed, which is actually Origin. It's a China company that's working on hybrid seeds. Now look at this. I mean, maybe we missed the boat on this one already if you're not already in. I was hoping that it would stick around here and maybe get down to 16. It got to yesterday, it got to 1677. When I say yesterday, I mean Wednesday. Not quite where my order would have been at 1650, didn't get filled. But the question is, any kind of correction now or consolidation down to 20, look at the momentum here and look at the outperformance here. This thing just went crazy. And also, even more importantly, is that I told you last week it was one of my favorite picks of the week. And boy, did that turn out to be correct. Now, if we move on to the retail space, this is something that people have not talked about in a long time. This is Zendesk. We actually use this software for our customer service. And so right now, again, divergence, negative divergence here to the price point. However, again, wait for either correction based on this negative divergence, either in this particular instrument or the overall stock market itself as it gets closer to the 50, or keep an eye on the real motion. I'm assuming you guys, many of you have bought our plugins. If not, you should. You can see they're very, very good. It's underperforming the SPY. And if it gets through 150, I would assume that that means the momentum is increasing. I wouldn't necessarily want to risk all the way down here, but I would probably say some kind of midpoint in between. Looks to me like a good risk area would be somewhere around 144 if it gets through 150. And then that is a reasonable risk. All right, moving on to AI, another stock I've covered with you over and over and over again, and that's FSLY. FSLY, again, news gets out that Cathie Wood's in it, the thing flies. We've been talking about it long before Cathie Wood got in. And by the way, now you can see the momentum is finally going positive here. And so the question is it too late to get into this? I'd like to see now some work to do around 100 so you have a better risk. And then, of course, if it can get through these more recent highs here at 107.93, let's call it 108, we do have a gap left here to fill at 121. That would be a nice little move up to 121 where I would start taking some profit. And you can see now it's starting to outperform the SPY. Next one here is NET. And this is Cloudflare. Cloudflare, same kind of thing. Divergence negative while the price is moving up. So once again, you have a couple of choices. You can wait to see if you can get any kind of correction in this. You can wait to see if the momentum starts to creep up closer to the 50, but it is starting to outperform the SPY here. I myself would prefer to buy it somewhere around 78 so that I can risk to under 75 in case I'm wrong, rather than buy it here into all of this resistance. Next one on this same list in this AI space is TWLO. TWLO is another one. This one actually is better in terms of the momentum, but the 200 is above the 50. It should be the other way around. And the momentum is still under the 200, although above the 50. And this thing is actually near this highs here of 400. So once again, what this tells me is that you wouldn't necessarily want to chase this, but if we can get any kind of correction closer to around 360, let's say, then I would feel that that would be a good place to get into this particular stock. Moving on now to space. I showed you two stocks last week. One was actually space. And again, another Cathie Wood issue. So it's really hard. You got to try to be in before she actually makes the announcement that she bought this stocks. But based on this gap up, 30 is really still your really good risk there. And we haven't quite cleared this 33.72 level we did on an intraday basis on this day, but we have to close above the 33.72. Then you can risk under 30 to see where this is going to go. Then at that point, you'd be looking at a move over 35.82, and then you're in new all-time high area. So it would be hard to tell you where this thing could go. The other one I talked about is actually UFO. It's not a UFO. It's actually a satellite company, but they're dealing in terms of space. And so what we're looking at here now is a new high and then a little bit of a correction. So we're getting a level of support to today's low at 27.60. And now I think if it takes out the close on this day, I don't have a candle close here, but if it takes out this day right here, then what we're looking at is maybe a move over about 28.25. Then you can use a risk to under 27.50. Okay, let's move on now to the healthcare space. Again, this is one I showed you long before Cathie got into it. Good momentum, good outperformance, inside day. This thing takes out 250. My target is 270. Hopefully some of you guys are in it from before. We got into this one well before. We're long this one from 202. So if it's going to continue to go as the healthcare sector could heat up, this could take out 250. I say 270 is one target. It could go much higher than that. Next one is Beam. This is more of a pharma company, but I liked this one. This deals with leukemia and also, interestingly enough, sickle cell, which is something you don't hear about very often, but it still very much exists. And I like that this has corrected. So because this has corrected, we're coming now into some level of support based on this low right here at 90, it says 90.46. If it holds this 90 level and starts to flip back up through 100, I think that would be an interesting indication. If it can't do that, then I'd be looking for a move closer to 75, and I think that would be your great buy opportunity. Next one is an oldie but goodie for us. It's eHealth, and I think this must have reported earnings. But look at the positive divergence here now, because you're over the 200 on the real motion, well outperforming the SPY right now, but still under the 200 in terms of the price. Now this went up pretty fast here, and it stopped really basically right into this resistance from this bar right here. So what I would want to see right now is what happens around the 77.78 level. So that's what I'd be looking at. A dip to 77.78. You can use the 50-day moving average as a stop. In terms of chasing it, probably would make sense to wait for this to high of the 83.62 to be taken out. But then your risk is a little bit harder to manage and you're running into the 200. So I'm going to keep it as 77.78 is where I would be looking to place a limit order to buy. Okay, let's move on now to the EV space. And a couple of things I know I haven't shown you before. One is QS. This is actually a SPAK. It's called Quantum Space Corporation. And I believe that they actually reported earnings on the 21st of January, but I cannot seem to get confirmation on that. But this was correcting really nicely. And what I like about it is that it's under the 50. Of course, we don't have momentum indication and it's still underperforming. So I'm not as concerned about that. What I like is that it found a level of support and reversed and went positive on the day I'm talking to you. So maybe I would give this really basically on a Friday. If we can get some kind of close somewhere between 50 and 51, I think you have a good risk to under 40 if you want to do it for more a swing position, if it has indeed reported and we have earnings out of the way. And if you wanted to do it for a more active position, then I would risk under 44.50 and get in, as I said, about 50.51 on Friday. Like this one a lot. Next one is also a SPAK. It's XL. Electric cars, and same thing. I'm so thrilled these things are getting correction. It went corrected, not quite to the 50 in price, but to the 50 right here. You can see on the momentum indicator. So if it holds up here, and again, after being negative for days going positive through 20 in XL, and again, you got to look at all these earning dates, but through 20 would give you a good opportunity, I would even say, to risk to under 17, which is the 50-day moving average. Next one is another one that's a SPAC, and that is BFT, Foley Trazamine acquisition. This has to do more with the batteries, I believe. And again, I wish I had seen this today because before I just showed it to you, I knew I liked it, but you had the inside day, again, no momentum. Look at this outperformance and it gapped up. So now you want to see what happens here around 715.50. That would be your parameter. And you're on new high. So you have no idea where this thing can go. So you could either use 1750 as kind of a risk. If it gets another inside day, that would give you a place to look at for next week. And if it keeps going up and you want to get in again, make sure you keep your risk type and your position size small. Okay, 2 more spaces to go. Next is cybersecurity. I know everybody looks at FireEye. I actually prefer to look at this one right now. This is LDOS holding. Again, doing really well on momentum, still outperforming, consolidating here. This is what I like. So a move over 110, you could have a risk to under 105. And I think this is a hot space going forward for sure. And when I did show you last week that I also said I really liked, oops, I must have put in the wrong symbol, excuse me. Here, TLS. Look how new this issue is. This thing, after I talked to you, it exploded. I know I covered this last week. Well, now you had kind of an interesting sort of almost topping pattern. So I'd like to see this come down closer to 35. When I say closer to 35, it's okay if it goes to 36. The only other way I would do this now is if it takes out the high to negate that reversal pattern, and that would be taking out 41.84. Then if you want, you have a couple of choices that you can do for this one. You can either risk to under 35 or you can risk to under the low of this day, under 37.50. Okay, a couple more to go. The next one is in really, I say, crypto space. One is RIOT. Crypto, as you know, has taken a big correction, although it's popping back here right now. It's really corrected down to the 50-day moving average. This is RIOT. It also now is back on par with SPY. But again, this is another one that had a nice correction and is reversing. This low yesterday was 2070. This high today is 2046. So I like gap fills. If it clears 2070, then you would have a pretty decent risk if you wanted to play it tight under the low of 1790. So that's another one to be looking at. And then the last one I'm going to cover with you today is Square, because this too has had a nice correction. They're, obviously using Bitcoin, and you've got 213.70 as your 50-day moving average. Look at your complete and utter destruction of the momentum going negative. I wouldn't necessarily wait for it to go all the way back over the 50, but you certainly like to see it go back over the 200. Not so worried about the performance here, but more importantly, after this big correction, if it continues to hold and gets back through 225, then again, that could be a good, interesting place to get into it. This has a big ATR as well, and then you can risk as close to the 50-day moving average as you want. But always, as I said, a couple of things to remember is number one, keep your eye on the IYT, keep your eye on the VIX, and keep your eye on the junk bonds. That's really where you're going to get your best macro feel right now in terms of what could happen next with these new tech stocks. Check your earnings dates, of course, and be cautious about buying well into earnings. Otherwise, you have a good list and a lot of actionable information to look at as we end this week and go into next week. So with that, thank you so much. Of course, put your comments in the YouTube space. I'm always happy to answer, and I'll see you all again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.